Let's go to CommSec. Tom Piotrowski's live for a look at the numbers today. How do we start off today on this day of World Cup semi-finals, Tom?
It's an exciting day, Pete, but unfortunately that excitement won't be reflected in the share market because we're anticipating a pretty solid deficit in the ASX 200 when we kick off. It's going to be down by about 1%, reflecting similar sort of declines for Northern Hemisphere stock markets. So what we've seen in the last day, Pete, is quite a complex mix of influences. On the one hand, we saw weaker growth outcomes in China that tainted the European performance. But then where Europe and the US are concerned, we saw some rather strong readings on a couple of fronts as well, which pushed long and short-term interest rates higher, which created headwinds for stocks. So quickly, as far as the European experience was concerned, we had the legacy of that weak growth picture that came through the Chinese results yesterday, and that was reflected in the underperformance where mining stocks were concerned. That was one of the worst sectors in European trade. But bank stocks were also marked down because we had credit ratings agencies talking about the potential for further downgrades in the US, and that kind of washed over into the European experience. So European banks were also marked down. On top of that, we had much stronger than expected wage growth in the UK, which just blew past the market's expectations. Wage growth coming in the last month at an annualized pace of 7.8%. That had the markets now talking about higher rates in the near term for the UK market, and that's why the FTSE was down by about 1.6%. German market down by about 1%. The French market down by about 1%. US markets, they also had to contend with some much stronger figures as well, Pete, on the front where retail sales were concerned. So they were almost double what the market had anticipated in July, rising by 0.7%. So when you consider all of the rate hikes and everything that's been done by the Fed in the last 12 months, to still see the consumer as strong as it is, that rankled markets, and we saw US long and short-term interest rates move higher. The Dow Jones finished down, and that's why we're going to be down by about 1% when we kick off. I know you want to wrap up.
It's a big downer. It's a big downer, Tom.